let's get into it. So, first of all, quick bio on who I am, just to set the tone. Uh, let's see, why is it? There we go. So, as Aaron mentioned, my name is Carter Cofield. I am a financial advisor and business tax expert. I'm the owner of my firm, Cofield Advisors. And just this year, I was the first African American male to make the Journal of Accountancy magazine, which was probably one of my biggest honors to really put on for the culture and let them know that we are smart too. I'm just going to move this screen so I can look at the questions as well. Cool. So that's a little bit about me, but today is not about me. Today is about you all. So my goal is to take you all from an overpaying, helpless taxpayers to tax experts and teach you all how to live tax-free. Take it from me. It's one of the greatest feelings to be able to take that money you would give to the government and invest it in yourself or in your business or into whatever other investment vehicle you want to. So in order for me to do that, I need you all to do me a favor. First of all, I want you to promise me that we're going to have fun because it's the last session. I don't want anybody going to sleep, so I'll make it as fun as possible. But the second thing is you got to shift your mindset about taxes, right? The number one reason why people overpay taxes is just because they're scared. And not just because they're scared of the IRS, but they're scared of even learning about it because they were taught to just pay whatever they're told to pay and walk away. So you have to shift your mindset first. And I'm going to help you take advantage of the tax code, not do any tax evasion. I'm teach you how to take advantage of the tax code, teach you how to live tax-free legally, and keep more money in your pocket and out of Uncle Sam's pocket. So I hope you all are excited as I am to kind of dive right into this. And then, without further ado, we'll get into the first actual slide. So I'm super in about shifting mindsets because I feel like that's the first shift that has to happen. So I need you to understand and truly believe that the tax code is your friend. Okay, so the tax code is your friend. It wants to help you. You just have to help it help you. Okay, and I have a note here that the tax code is not meant to benefit average people. So all you have to do is stop being average. If you do that, I promise you, you'll be fine. So stop being average. I'm going to teach you exactly how to stop being average. And as you see, the next slide is just really letting you know the tax code is your friend and you're in control. So let's get into a little bit of the meat and potatoes. So who does the tax code help and who was the tax code made for? So the tax code was made to benefit entrepreneurs and business owners. That's it. The tax code was literally made to benefit entrepreneurs and business owners. And I want to preface this by saying not like corporate America CEO, Amazon business owners, like them too, but they want to help Amazon business owners all the way down to your local mom and pop shop, all the way down to the person running their business in their home, right? Whether you're running a website company from your room or running a consulting company, or if you're simply renting out an extra room as an Airbnb, you are technically a business owner and the tax code is made to help you. Okay, so in order to benefit from the tax code, you must join the right team. Okay, so you're going to hear me make sports analogies to tax all the time because it's really, really similar to sports. Like you can't win the game of taxes if you don't know the rules. So you can't win the game of sports if you don't know the rules as well. So I want you all to know that to be on the right, to benefit from the tax code, you need to be on the right team. And then once you're on the right team, you can go from there. And the average American pays 40% of their lifetime income to Uncle Sam. Now, this was mind-boggling stat to me just because the average person makes over $1 million in their lifetime. So if you make over $1 million in your lifetime, then you're paying $400,000 of your lifetime income to taxes. And that's just too much. That's just too high of a price to pay when you simply don't have to, as long as you follow these rules. So we're not going to pay 40%. We're going to pay so much less than that. But even can pay zero taxes. 2 years ago, I didn't pay any taxes and I made six figures. It was one of the most beautiful experiences of my adult life. So I'm going to teach you all just how to do that. So now I want to teach you all this golden formula, because before you can begin saving taxes, you have to understand this very simple formula. Once you understand it, you'll be able to use it in your favor. So I'll call it the golden formula because when it hit me, I literally was at work like, what the hell am I doing here? So the golden formula works like this. Employees on the left, right? They earn money, they pay taxes, and they spend what's left. They have no control. The government takes the taxes out of their paycheck before they even get it, right? Now, as an entrepreneur, business owner, even as someone with a gig, right? You make money, you spend what's left or reinvest it, and you pay taxes on what's left. So as you see, that formula just flips, but that flip is so important. And that flip is about a $10 to $20 to $30,000 savings flip. If you're able to do that properly. So I want to teach you all how to go from the left side of the formula to the right side and all that goes into it. So now that you understand the golden formula, I want to put some numbers to it. And these are my actual numbers from my last year in corporate America to my first year owning my own business. So when I left my job in corporate America, I made about $100,000. And I ended up, my tax bill was literally over $25,000. So I had like, $74,000, $75,000 left to spend. Now, when I made $100,000 in my business, I reinvested 75, and I spent money on like different courses, traveling, conferences, all the stuff I want to tell you all about. And I only had a $6,250 tax bill. Literally within 1 year, I saved $19,000 in taxes just by making this simple shift. So I want you all to understand that the shift is possible and that anybody can do it. And then once you do it, I'm going to equip you with the tools on how to do it the right way. Now, I want to make a quick segue because I don't want you to think that you have to quit your job tomorrow to get these deductions, or quit your job down the line, or if you're an employee, you're not entitled to this. So I feel like a lot of people make these excuses that, okay, this is not for me. So I want to let you know about what I call the side gig cheat code. So as I mentioned before, you don't have to be a legit LLC, S corporation, whatever business owner to be entitled to these deductions, okay? You don't have to quit your job to get these deductions. You can literally start a side gig and you're able to join the right side of the team. So I want you all to do me a favor. I want you to take a few seconds or a few minutes and just write down 3 to 5 side gigs that you can start tomorrow. And I'll even help you give an example because I don't want you all to think you got to quit your job to do this. One example of a side gig is to list your car on Turo. Turo is a platform that allows you to list your car and let people rent it. And then now you get to realize all these tax deductions and basically get to keep your car for free and make money off of it. You can be a dog sitter, right? And you can start a side gig doing that. You can create courses and sell them. You can get paid to do webinars. There's so many things that you can do. And actually, it's an app called Steady that will help you find local side gigs in your area so that you can begin to take advantage of these deductions. So I really wanted to spend some time harping on a lot of things that you can do to start a side gig. Airbnb, exactly. So you rent out your room as an Airbnb. These are side gigs, but you're technically a business owner in the IRS's eyes. So let's move on. I really wanted to let you all know that. So what are tax deductions and write-offs in the first place? I know we hear this a lot, like, hey, that's a write-off, this is a write-off, this is a write-off, but we don't really know what it means. So I want to spend a quick second just giving you all some background on what a write-off or tax deduction is. So the definition is really simple. It is a tax deduction or write-off is a deduction that lowers your tax liability. Simple as that, right? So it's just it's an expense that lowers your tax liability. So if we go back to that formula really quickly, you see this money that we spend or reinvest, these are tax deductions and write-offs. And these are the things that allow us to not pay nearly as many taxes as our employee counterparts would, or somebody that didn't have a side gig set up. So write-offs are really simple. And the IRS has one rule about write-offs for you to know that if it's valid or not. And the rule is that what qualifies as a deduction, it has to be two things. It has to be ordinary and it has to be necessary to operate your business. So it really all depends on what type of business you have. So if you're a photographer and you're doing headshots or you have a photography business, is buying a camera ordinary or necessary to run your business? Absolutely. So that's all you have to do is when you buy something for your business, just do the ordinary and necessary test, right? So let's talk about having a car on Turo. If you go get an oil change, is that ordinary and necessary to keep your car in good condition to continue to rent it out? Absolutely. So that's all the IRS says. It has to be ordinary and it has to be necessary to operate your business. If it passes those tests, you are able to use that expense to subtract from your income to lower your tax bill. So I want to play a little game, and then we have a chat box. So I'm giving you all about 10 to 15 seconds per question, and we're going to go through this together because I want to make it interactive. I want to make it fun. I want to make saving money fun. So let's go into it. So I got these 5 things that says ordinary and necessary test. Um, so I want, I'm gonna go for each one. I want you to put in the chat box. Yes, it's a tax deduction, or no, it's not. So number one, your phone. Do you think do you think if your phone bill or your phone is ordinary and necessary expense to run your business? Like, do your clients have to call you on your phone? Do your customers have to call you on your phone? So I see a whole bunch of yeses. I'm gonna give it about 5 more seconds while I get some water here. Okay, so I see a whole bunch of yeses, and the answer is yes, of course. Your phone bill is absolutely ordinary and necessary to run your business. So now you get to write your phone off, which is huge. You're paying for that literally anyway. So number two, computer. Let's say you're running a business and your business is ran virtually like mine. Is your computer ordinary and necessary to operate your business? Okay, so I see some yeses. I see some yeses. Okay, and I'm gonna skip the next two because I think that they're kind of easy. The paying someone to make your website, obviously, you pay somebody to make your website is tax deductible, of course. Now, business cards. If you want to pass out business cards to grow your business, pass out business cards at conferences, of course, it's tax deductible. And the last one I want to harp on, a $2,000 camera. Now, I do want you all to answer this because this one is a little bit tricky. So I'm gonna give you all a couple seconds to answer this $2,000 camera. Okay, and I see a couple answers. People already answered it beforehand. Yeah, so as I don't want to butcher your name. I think it's Aisha. As she mentioned, it depends on your business. So when they say ordinary, it needs to be like an ordinary expense. So if I'm an accountant and I buy a $2,000 camera, no way, right? Because that's, I don't need a camera to run my business. But if I'm a videographer, a photographer, I could spend $10,000 on a camera because ordinary and necessary to run my business. So I just want you all to understand the ordinary and necessary test, because that's a huge test that you're gonna need to know in order to be calculating these write-offs. So here's one of my favorite slides, because I'm about to blow some of you all's minds. This is not even a complete list, but this is just a really robust list giving you all of the deductions that you're able to write off in your business. So we're gonna take a quick look at these. I don't want to go into everything, but these are all the deductions that you're able to get once you go from employee to business owner, or employee and side gig, right? It doesn't really matter, but these are all the expenses you get. Traveling, anytime you hire a contractor, education related to job needs, anytime you take a course, anytime you take an online course, anytime you take a conference, anything that's completely deductible. Legal and accounting fees. So we were just talking, with the legal expert before. Any money that you pay her is tax deductible once you become a business owner and or entrepreneur and or have a side gig. Meals and entertainment, one of my favorites. Anytime I go take a friend out, the bill is on me because I get to deduct it as a business expense. Automobile insurance, we talk about health insurance, depreciation. I don't want to go through all of these, but like parking fees, that really got me. Parking, literally all the fees I get for parking in downtown Chicago, I get to write those off, say less, right? So consulting fees, trade shows, all these things are tax deductible. And I said exactly, and get the W-9 support those payments. Yeah, and you want to support these payments. We'll talk about that towards the end. But like, these are so many expenses. We haven't even hit the tip of the iceberg yet. I got some surprises for you towards the latter of the course. So this next session is going to teach you exactly how to deduct everything. And I want to get you to a point where you make your entire lifestyle tax deductible. And that's my goal every year. I want to make every time I spend $1, I want it to be tax deductible. If it's not tax deductible, I don't want to spend it. That's how I live every single day of my life. So I'm going to teach you all what you need to do to be able to do this successfully. So here was my epiphany when I was at work, when I was learning about this, and I was a CPA before I started, had my job. And I want you all to know that every CPA doesn't know this. So if you working with another accountant or CPA and they say this is not correct, they just didn't take the time to study the tax code as much as some other CPAs did. And a lot of the older CPAs, they just don't want to deal with this. They don't even like look at updates to mandates or anything like that. So if your CPA is telling you you can't do this, you need to just find a better one because he just didn't do his research. So the epiphany that I had was that so many of my personal expenses are business expenses. I just wasn't an entrepreneur yet. So when I went home one day and literally calculated all of the expenses that I already had that were going to become business expenses if I simply started a business on the side, and it was over $12,000. Literally, I calculated that over a year, there's $12,000 of expenses I'm already incurring that will become a business expense once I open up shop as a side gig or entrepreneur. This literally made me quit my job a week later. Again, I'm not telling anybody to quit their job. I had a business I was working on anyway. I just needed to pull the trigger. So I want to talk to you all about 10 deductions that immediately, like you don't have to do anything, 10 deductions that immediately, 10 personal expenses that immediately become tax deductible once you make your first dollar in your side business or in your full-time business. Your phone and your phone bill become tax deductible immediately. Apple Watch, where is Apple Watch? I didn't really want one, but it was on sale and I knew I was getting tax deductions. It was end of the year last year and I had made too much money. So I had to spend it on something. We'll talk about year-end expenses. So Apple Watch is tax deductible. Auto expenses. So it's so many auto expenses that's deductible. I don't want to dive into the details, but just know that you can either deduct your miles or you can deduct everything else, which is like car insurance, gas, car washes, repairs, internet. The money I was paying for my internet bill is tax deductible. Ubers and Lyfts, getting around the city to other meetings, to go to other places to work, completely tax deductible. Can you talk about tax fees being deductible? Yeah. So any money you pay any type of accountant for any type of accounting work is tax deductible. So doing your tax prep, we do a lot of tax planning where we tell clients, hey, we can save you $30,000 and we'll just charge you 20% of that. So any money that they pay us, period, as an accountant or as a legal professional, those are tax deductible as well. So if you're paying to do your taxes, to get your taxes done, once you start a side gig, you can now write that off. So I want you all to know that. And it's just, one of the beautiful things that you're now able to do. I thought you were talking about taxes itself. No, tax fees. Yeah. Health insurance premiums. Health insurance premiums are out the roof. So you get to deduct those if you become an entrepreneur, but you can't deduct the ones that your employer pays for. It has to be paid through you as a business owner. Tax fees, membership dues. So I'm a member at Soho House, and it can get pretty expensive if you get the world membership. But since I meet with my clients at Soho House all the time, I'm able to write off that expense. Education. So I invest about $10,000 to $15,000 into my own personal education every year. Not like school, but like conferences, online material, different events. I invest heavy into myself. So all that money I'm investing in myself, I get to deduct that as a tax expense. So I hope you all are understanding this. If you're not, tell me to slow down and go back, because this part right here, how to turn your personal expenses to tax deductions, is so huge. Now I want to walk you all through a scenario. It's some numbers, but I promise you the numbers aren't scary. I just want to really show you how powerful starting a side gig is, even if you want to keep your full-time job. So I put this little scenario together. I'll walk it through very slow and you'll understand it. I promise. If you don't, say something. The first scenario is this guy named James, right? He earns $100,000 at his employer, right? 25% tax rate. He gets taxed $25K out the door, can do nothing about it. But throughout the year, James still was spending money. He paid $3,000 a year for his phone bill. He bought a new computer, and let's just say he's in to web design, right? He bought a new computer. He traveled $6,000, new computer, $6,000 on a $6,000 on travel, $5,000 on conferences, $1,500 on home office renovations. So he ends up with $46,000 left. So he made 100. The IRS took 25, and then he only got to keep 46, which makes $100,000 not seem like such a big deal when you think about it, because the money gets taken from you. Now look at the second scenario. So James, this next year, does the same thing, makes the same amount of money, but all he decides to do, he says this, I'm a marketing design major. I worked at this full time. I know some people out there need my help designing their website, right? So, or doing some internet marketing for them. So he starts a side business. He doesn't make that much money. He only makes $5,000 in the side business. But watch this. Since he started that side business, all of these expenses that he already incurred now become tax deductible because he's now a business owner. So he gets to deduct these $17,500 worth of expenses. Okay, so now he earned 105, but he's only taxed on 87.5 because he got to deduct those expenses. So the point is, he got to keep $18,925 more simply by starting a side gig and making a little bit of money. Does that make sense? Let me know in the chat box if anybody got that, or if you need me to go over that example again. Okay, cool. So this is a very real life example. And again, I would love for you all to make the leap and start your own business, but some people are really nervous. So I say start it as a side gig first, then expand it after that. So now what Aaron was talking about is getting organized. So in order to keep these deductions, you want to get organized. And getting organized is pretty simple. So once you start your business full time, all you want to do is go open a business bank account and have all the money that you make come in your business and all the money that you spend go out of that bank account. If you do it that way, it becomes really, really simple to track everything, because all you have to do is pull the account statement and all of the transactions throughout the year are on there. Let's see, right. I've been telling my husband to start sports YouTube because he pays about 30 to 40K every year on taxes. Yeah, start a sports YouTube channel. Here's what I will say. You can't deduct these things until you make your first dollar. The IRS doesn't let you start something and say it's a business when it's really a hobby if you're not making any money in it. So you have to once you make your first dollar in that business, then those expenses become deductible. And Keenan says, how do you treat your savings? How do you treat your savings and minimize taxes on that? So I encourage everybody to have well, I don't know if this is a question that you're asking, but I'll make sure to answer at the end. But I want to make sure I'm answering it right. So in the meantime, can you make sure you clarify that so I don't answer it wrong? And I was going to talk to you guys really quickly about how to get organized, because getting organized is important. It's boring, but it's important. So if you're starting a side gig, all you really have to do is keep an Excel doc. If you don't have an LLC, you're not incorporated, just keep an Excel doc. And as long as you keep the date that you purchased the item purchased in the amount, that's good enough tracking at the beginning. So I don't want you all to get overwhelmed and say, I need QuickBooks and everything like that. So if you start a side gig, Excel is great for tracking. However, once you get that LLC and become a serious business owner and you want to take yourself seriously, get a business bank account and separate all your personal and business expenses. So move your phone bill to the business account, move all these things to the business account so you separate it. And because there's something what's called piercing the corporate veil, which I don't want to get into, but you just don't want that to happen. So make sure you separate them out. And then if you want to use a bookkeeping software, I highly, 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 highly recommend QuickBooks. It's $10 to $15 to $20 a month, and it saves you a lifetime. So start out with Excel, then grow your way up to getting QuickBooks, something like that. Now, this is my literal favorite slide of the entire slide. So if you stayed this far, I really hope that you can consume this the way I'm about to deliver it to you. So these are the 3 best tax saving strategies that I use every year that save me close to $10,000 to $25,000. So there's a simple way to turn every single personal vacation that you take into a business vacation. And therefore, you get a tax deduction for that. And it's a really simple strategy. Now, I don't have time to go through the strategies today, but I want you all to be aware of this. Turning your personal vacation into a business deduction is huge, because now every single time you travel, you get to write it off on your taxes. I take 3 trips a year for about 30 days at a time. And those are my think weeks or months or whatever. And I get to deduct those in my business. The second thing is that you can get an $18,000 tax deduction for buying your dream car. One of my clients, she's a nurse. She owns her own practice. She just bought herself a new BMW AMG, and she's going to get the right of $18,000 off on her taxes this year for buying that car. The third thing is make your shopping trips tax deductible. So there's a way that you can make every time you go shopping, you can make that a tax deductible expense. Now, unfortunately, I don't have time to go through those, all those today, but I will have a resource that you can get to learn exactly how to do those. So I hope you're as excited as I am. So it's been about 30 minutes, and I know I went over a crap ton. So I know a lot of you are probably feeling like this right now, because I literally threw everything at you at one time. I'm so excited to connect with you as well after this. But I know I went through a lot, and I know a lot of you feel like this, and I have to go fast. So I know a lot of you want to learn at your own pace. So when people hire me, I charge a fair price for my services because I work hard for what I do. So since everybody couldn't afford my services, I decided to create this course that I just dropped 2 weeks ago. And it's called Deduct Everything, Your Blueprint to Tax-Free Living. So this is something that literally everybody can afford. This course will teach you everything we just talked about and so much more if you want to take advantage of it. And it was priced at $197, but I made it 50% off because I knew I was doing this. So $97. Like if you want to save thousands of dollars and you're not willing to pay $97, then that just means you don't want to invest in yourself, and that's fine, but just know what comes with it, So I wanted to make sure that people didn't have an excuse that they couldn't find out how to live this tax-free lifestyle. And I even offer a money back guarantee. So if you don't feel like you get $97 worth of this course, then that means I've done something wrong and I'll refund people's money. Nobody has taken advantage of that or has said that. But the point is, I'm very confident in that this course will help you. Now, the link is in the bio of in the expo, but I'm gonna drop it in the chat box if you want to just go check it out for yourself, so you don't have to do too much work. So I'm about to drop that in the chat box right now, just so that you all have it. And I wanted to leave a little bit of time at the end for Q&A, and I want to make sure I get back to Keenan's question as well. So I'm going to quickly drop this in the chat box. Okay, so in the last slide, just let you all know that I'm always here to help. If you want more help outside of that, feel free to connect with me. But I do this thing called tax-free. Okay, we had 9 minutes before cutoff. So I do this thing called Tax-Free Tuesdays every Tuesday on my IG Live. So follow me on IG, follow my blog, or reach out to me via email, and I'm here to help. But if anybody wants to ask questions, I'm here for another 9 minutes, and I'm here to help answer any question that I didn't already answer. Oh, I felt like I was doing a lot of talking. And I'm going to... Cool. Happy that you all enjoyed it. Aaron, if you want me to stay for a little bit longer, let me know. Or if you want to take back over, let me know, and I can set it to leave. Just let me know how you want to proceed, because I know we only have 7 minutes left.
Nope, you're good. You can keep talking for 7 minutes. The platform just will cut off, so everybody it will kick everybody out in 7 minutes.
Yeah, Carter, just to explain what my question was, what I was talking about is, I think you explained really well on if you spend more, obviously you can lower your taxable income. For those of us that are trying to build savings and have a little kitty as well, I'm assuming that income is still going to be taxed. Are there any strategies or places to put that money so that you can pay less taxes on that, but still access it if needed?
Yeah, so that's an amazing question. So first, I want to preface, you never want to spend money just to save it if you don't need what you're buying, right? Because that's just wasting money. You're spending $1 to save about 30 cents. You don't want to do that. But at the end of the year, you have some choices to make, because after December 31st, there's really not much you can do. So to answer your question, there are places that you can put the money to save on taxes, but getting it out is going to be tough. So you can put your money in a traditional IRA, or if you're a business owner, a STEP IRA or solo 401k, and you're able to put up to $50,000 and save it and invest it. So the money is saving and it's growing for you, but there are penalties for touching that money early. But there are ways to get around those penalties. So let's say you put money into an IRA, $6,000 to save money, but you didn't want to spend it. You can still use that money to buy your first house, or you can use that money for like a really crazy hospital bill or something dire, right? But they don't let you do it just to go pay rent the next month. So business owners, we have this daily juggle that we're trying to save money, to reinvest into our business, and we're trying to save money to feed our families or ourselves. But we also want to find ways to save on taxes. So I think what I tell my clients to do, we meet every November and we build a plan on how we're going to save money at the end of the year, so we're not spending too much, but we're also not leaving too much.
If you take that income though and you invest it in another LLC or corporation for yourself, is that money taxed?
No, because you're technically using it to start another business, but it gets really complicated if we talk like C corps and stuff, because they're taxed twice. So it's like, what evil do you want? So and these are complex strategies that obviously require for one-on-one discussions. But I love the way you're thinking. Everybody should be thinking before, because like people reach out to me in February, there's nothing I can do anymore, right? And the last quarter of the year is tax saving time. The last 3 months of the year, you need to be meeting with whoever you need to meet with to build a plan to lower your taxes. And yeah, I think it's a great way to spend your time and your money.
Thank you so much. This was great, man. This is always needed, and I know that code changes every year, so we got to keep going. We're buying all the books.
Absolutely. And I just followed you. Your session was great. I love that tip of, you have to love what you do more than you love the comfortability. Like that's real. As far as like being an entrepreneur, because I had to, the peace of mind and knowing the check comes every day, that's nice. But it was never more appealing than knowing I can wake up every day and do what I love to do. So if you hit it spot on, I'm still in that. But I'm always let the crowd know where I got it from. I'm taking that with me.
Yeah, I'm taking all your gems today, so I appreciate it. Thank you, brother.
Did you rip the Band-Aid too? You just ripped it off, Carter?
Yeah, I quit and took a 1-week trip to London because I was scared I was going to try to get my job back. Like that's how serious it was. So I had to get out the country. I would have went back and tried to get it back. So whatever it takes.